Hi, Bill. We're back now after lunch. SeriousTrader here, folks. And Bill, we were talking over lunch about what I saw as a little different view on the concept of the head and shoulders bearish trend that had set up in the Dow and the S&P 500. And most people have been looking at the shorter term head and shoulders. And I was asking you about the longer term head and shoulders that dates back out over about closer to 3 years. Especially as we looked at the Dow charts. And two questions that came up out of that. And one is that today, September 17th, so everybody knows, the Dow actually broke below what I saw as the longer term trend. So you were looking at where is support for the Dow on the downside, and really the how we can't really predict where the market is going to go, but we can at least understand what potential support points exist and what the opportunities are within trading or within the trading world right now.
Sure. Yeah, the head and shoulders is a well-known, well-defined pattern in the arena of technical analysis. The tough part about it would be, well, when is the neckline actually breached? But when it is breached, it's a pattern that has a high success rate. And the one you're talking about that goes back in the past quite a bit, it was a major formation that formed over the last couple of years. And that neck has, it appears that it's been breached. And that would suggest a Dow dropping to the 10,000 area, maybe the 9,700 area. The more recent head and shoulders pattern that's just formed in the last several weeks suggests the same thing. Curiously, that with the neckline breached, it takes the Dow down to 9,700 area. And there's other technical support at that level as well if you look back at the charts. So what does that say? The Dow could easily go to that level. Now, beyond that level, if you look back for technical support, well, you got to go all the way down to 7,500 before you see really strong support. And so that suggests the Dow could go that low. It doesn't mean it will. It doesn't even mean it'll go to 9,800. It just suggests that those are possibilities that traders should watch for. At some point, the market will bottom. And a new bull market will begin. That could happen after the seasonal October lows. It could happen a year from now. We just don't know. And that's why it's so important to have good trading methods so that you're not guessing on when the market's going to stop going down or when it's going to start going up and so on. A good trading method will get you on the right side of the market most of the time, and there's no guessing about it. You just follow the rules. So while it's interesting to forecast where the market might go, making trading decisions based on those forecasts, in my view, is not a very good idea. So we've outlined a couple scenarios. Don't know exactly how it's going to play out, but don't have to know. With good trading methods, you'd be on board up or down and get positioned for good trading opportunities as they develop.
So it's pretty much like we talked about in the last video, where out of this turmoil, traders should be looking for the opportunity to profit on individual issues, not necessarily worried about the market at large or as a whole.
Yeah, I think that's right, and because in this market here is choppy and as much turmoil as it's been in, there have been very nice trends on individual stocks, both up and down. So you could have shorted any number of the financial related stocks, in the last several months and done very well. There are other stocks that had nothing to do with the finance sector where you could have bought those stocks and done very well as well. So you're right. Yeah, the market can be chopping around every which way, be very volatile, be plunging one day up the next. there are still stocks within that market that are suitable for trading in both directions.
Thanks very much, Bill. We'll see you again soon.
Okay.